Welcome to this month's XPS update, keeping you informed of the key developments and how they may affect your scheme. In mid-August, global equities fell by 2.6% in their worst week since the banking crisis in March. They then rallied in the final days of the month in anticipation of a slowdown in US job creation, easing pressure on the Federal Reserve. In the UK, long-dated gilt yields exceeded 5% mid-month, almost reaching their highs of last October, only to fall back towards the end of the month. Government borrowing in July was around £700 million lower than expected, as borrowing for the financial year grew to £57 billion. This remains £11 billion lower than has been predicted in March. Further interest rate rises by the Bank of England later this year looked increasingly likely over August, with a predicted rise of 0.5% before the end of 2023. Global equity returns were negative for the month overall. UK equities underperformed, and emerging markets in particular had a tough month, weighed down by concerns over the resilience of the Chinese economy. In bond markets, UK credit performance was marginally negative. Global high-yield bonds, on the other hand, posted a strong month on the back of growing belief that the Federal Reserve will execute a soft landing in the fight against inflation. Fixed interest and index-linked gilts both delivered negative returns. Aggregate UK DB pension scheme funding ended the month much where it started it, but the path during the month was bumpy in light of the significant volatility in government bond yields. Yields ended slightly higher than the start of the month, and liability values fell as a result, but the impact on pension scheme funding was almost completely offset by underperformance from growth assets. That's it for this month's update. For more information, please contact us.